What if I told you, you don't need to be rich, you don't need a finance degree, and you can still start building wealth in the stock market? But every single day, millions of people in the US are quietly growing their money just by understanding one simple system, the stock market. So in the next 20 minutes, I'm going to break it down in the simplest way possible. No confusing jargon, no complicated math, just real, practical knowledge you can actually use. Part 1. What is the stock market? Let's start with the basics. The stock market is a place where people buy and sell ownership in companies. Yes, ownership. When you buy a stock, you're not just buying a number on a screen. You're buying a small piece of a real company. For example, if you buy shares of Apple, you now own a tiny part of Apple. That means, if the company grows, you grow with it. If it struggles, you feel that too. Think of it like this. Imagine your friend starts a business, and you invest money into it. If the business becomes successful, your investment increases. That's exactly how the stock market works, just on a much bigger scale. Part 2. Why do companies sell stocks? Now you might be wondering, why would companies give away ownership? Simple. To raise money. When a company wants to grow, launch new products, or expand globally, they need capital. So instead of taking loans, they sell shares to the public. This process is called an IPO, initial public offering. Once a company goes public, anyone can buy its shares, and that's when it enters the stock market. Part 3. How do people make money? Now let's talk about the real question. How do you make money? There are 3 main ways. 1. Price growth, capital gain. This is the most common. You buy a stock at a lower price and sell it at a higher price. Example, you buy a stock at $50. Later it goes to $80. You sell it. Boom, $30 profit per share. 2. Dividends. Some companies share their profits with investors. This is called a dividend. So even if you don't sell your stock, you still earn money. Think of it like passive income. 3. Long-term growth. This is where real wealth is built. Instead of trying to make quick money, you hold strong companies for years. As they grow, your investment compounds. This is how many millionaires are made in the US. Part 4. Trading vs investing. There are 2 main styles in the stock market. Trading, short term. Buying and selling quickly. Trying to profit from small price changes. High risk, high stress. Investing, long term. Holding stocks for years. Focus on strong companies. Lower stress, more stable growth. Here's the truth most people don't tell you. Trading looks exciting, but investing builds wealth. Part 5. How to start, step by step. If you're in the US, starting is actually very simple. Step 1. Open a brokerage account. Apps like Robinhood, Fidelity, Charles Schwab. Make it super easy. Step 2. Add money. Start small. Even $50 or $100 is enough. Step 3. Choose stocks. Begin with well-known companies. Don't chase hype. Look for strong business, consistent growth, good reputation. Step 4. Invest and hold. Don't panic when prices go up and down. That's normal. The market moves every day, but long term, it trends upward. Part 6. Risks you must know. Let's be real for a second. The stock market is not a guaranteed money machine. There are risks. Prices can fall. Companies can fail. You can lose money. That's why. Never invest money you can't afford to lose. And always learn before you invest. Final part. Mindset and closing. Here's the difference between people who win and people who lose in the stock market. Winners are patient. They don't chase quick money. They build long-term wealth. Losers try to get rich overnight and usually lose everything. So start small, stay consistent, and think long-term. Because the stock market isn't just about money. It's about building freedom. If you found this helpful, make sure to like the video, subscribe for more simple finance content, and remember, your financial future starts with the decisions you make today.